Good morning, good afternoon, good evening, depending on whenever time you are watching this video. And I welcome you back to the episode 4 of growing a $200 account to 4 figures. Now, in this episode, the trade I took actually tested me. I mean, for those of you that traded today, okay, today is 19th of August. As at the time of recording this video, today is 19th of August 2025. Price action was so bad. I mean, I entered this trade, I waited for this trade on 18th of August. I saw the setup. I entered around 19th of August, 8 a.m. in the morning, or I think 7 a.m. in the morning. I entered this trade, and the trade just kept ranging and ranging and ranging until afternoon. I couldn't hold it any longer. I had to I closed the trade at break even. Right, you see a screenshot attached to the trade where I closed it at break even. But I didn't just close it at break even because of the duration in which I was holding the trade, but it was due to the things I saw. Okay, my buyers actually switched. I was going for a longs on USD JPY, but after a while things changed and I was able to like switch my buyers. I didn't take a trade, but that's another thing about professional trading or understanding your strategy. You need to know when your setup is no longer valid or it's looking somehow from an A plus setup is looking now like a C. I mean, have you ever entered a setup whereby you take the trade and it's an A plus setup, but after price taps you in, it starts to do somehow like the trade is no longer an A plus again. There's no volume, there's no volume, there's no momentum in the market. The market is just consolidating, that kind of stuff. You don't want to be in that kind of trade. And if you do, uh, probably are willing to lose. Now, another thing again, before I break down the whole video for you guys to see how I spotted the move, how I analyzed everything perfect, clean and all, and how it eventually played out because the market really tested me on this one, tested me. I want to say that, when you are trading a new account, if you are trading a new account, you want to make sure that you are far away from drawdown as possible. I said this same thing in the end of this video. If you stick around and watch until the end, you will hear me saying it. You want to stay away from drawdown as far as possible because the moment you start a new trading account and you are going deep into drawdown, it becomes hard for you to climb out of that drawdown to profit. That's why you see me, I'm kind of like taking profit quick. I said it in the episode 1 of this challenge. Once the trade is up, 2 hour, 1 hour, I'm locking in some partials and all of that so as to compound profits, compound those profits. When the account is up like 10%, okay, now the account is like maybe $220. Good. I have breathing space. I can, use those money to then make more money and be comfortable with a couple of losses because I know now I'm no longer losing my capital. I'm losing the money I made from the market, the profit I made from the market. It's just the psychology behind it, all right? Because if you start trading and then you are losing and losing and losing, or you're not, locking in profits because of you want to, however you want to trade, it's just a mental game, okay? The moment your balance is dropping to 190, 180, 160, it becomes so hard to come out of that drawdown. And also if you observe, I'm going for, I'm risking 1%, 2% thereabout on my trades. I'm not risking $20, $10 on one trade. I'm not flipping. This is not a flipping challenge. The goal, if you check the description of this video, the goal is to teach you guys how to trade, the right way, following the right trading principles, growing your account with a clean equity curve. Because over time, I'm going to like show the equity curve of this account I'm trading, so you see how clean or how rough it will be. You don't want to say there are some people that can flip the $200 to $1,000 in a couple of days. Yes, that's true, but is that sustainable? It's not. So you want to trade the right way, the same way you treat a $200 account. Trading the right way is the same way you'll be able to treat a 5,000, a 10,000, $100,000 account if you are able to build that discipline. Okay, I think I've said enough. That being said, sit back, relax, because this video is actually long and very, very informative. grab a coffee, whatever it is, sit back, enjoy, and then enjoy the value. Also, make sure you like and subscribe to this video, because if you don't, I don't know why you are here. I don't know why you are being stingy and greedy, getting so much value from me and still not showing any form of appreciation. All right, that being said, enjoy. So on the 15 minutes time frame, you guys remember that I entered down below here. Yeah, so you remember this was my anticipation, and then we came close. I missed, then I re-entered. Yeah, I re-entered here and then went up, got stopped out in profit, took partial here, and then we've been trading higher ever since, after a kind of ranging in this place. And me, I don't like to be in a ranging market, so I'm even glad that I got stopped out in profit rather than holding that trade since this morning until now. Not like I can't hold trade for long, it depends on the risk to reward ratio, but once a trade start ranging, I mean on the higher time frame, I don't like it. So this was a setup I missed actually, but at the same time I missed it because I wasn't on the charts. I was doing other things. Okay, trading is not my only source of income. So here, this was a breaker block in which, you know how I trade the other ones. Yeah, you might have started getting familiar with my trend continuations now. So this is a breaker block. We have a change of character. And then price came immediately by the next candlestick, filled it, and boom, continue higher. So we could have had something like this. Could have been something like this. Entry at the change of character line, stop loss at this fractal low here, like this, and then take profit is going to be this. Yeah, same target. I told you guys price is heading to this point. I'm very confident. Okay, but the pullbacks that is going to occur before price get there is what I don't know. So I'm not holding trades. I have to take profits and all of that. So people be like, oh, you should, has it been you held until? Nah, bro, nah. Okay, you can always find continuations and enter, still capitalize on the move, as long as you know where price is going. That's all that matters. So it will have been basically in like this, staying into the profit, and then we'll be floating in profit right now, which is not bad on the 15 minutes time frame. If you come to it on the 30 minutes time frame, this is it. So we had this bullish breaker block, and then price came, boom. Did he even tap it? Man, I don't think spreads will, nah, I don't think spreads will have even tapped me in if I had entered with this. Spreads wouldn't have tapped me. And by the way, I might have decided to be, conservative. If I say I wanted to enter in 30 minutes, so I'd have entered here. I wouldn't still get tapped in, basically. Price is kind of riling up. So now that's just the explanation on that. Now what am I looking at? Let's go to the 4-hour time frame. So if you see here, price is about to break this high. We had a change of character to the downward side, but we never broke structure. Had it been price, took out this low here, we'll have had a break of structure. But immediately after tapping this area of demand on the 4-hour time frame, see here, this area of demand, we had a strong rejection to the upward side immediately, paired together with PPI. I was expecting a short, but that was episode 1. It stopped me out before eventually going down, and now we are trending up again. Now if you see in this part here, once price take out this high, it's going to be a break of structure to the upward side, because you can see this was a break of structure. This is also going to be a break of structure, which means this would now become an area of buys, point of interest to buy on the 4-hour time frame. It's going to be like this. This is going to, don't worry, when price reach there, you see. So this is going to become a breaker block on the 4-hour, a bullish breaker block. So this sell here most likely wouldn't hold. That's the reality. This sell here most likely wouldn't hold. Okay, for those that want to trade reversals against, that's why you need to look at the whole market structure. You want to trade against the trend. This point here is going to become an area of buys. Look at it on the daily time frame. If you look at it on the daily time frame, okay, still loading. You see how bullish we are on the daily time frame. So saying you want to short the market right now, the daily time frame is also coming for this high. And once the daily time frame takes that high, that's going to be another break of structure to the upward side. So it's right now I'm just sitting and waiting for confirmation. I am still bullish, very very much bullish at this moment, because with what price is doing, look at the daily time frame here. I'm very 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 much bullish on price. Shorting USD JPY right now, price is definitely coming out for this high. So we're going to have something like this. Let's say on the daily time frame, it's going to be something like this. We go up, take this out, and then come back. That supply now becomes a strong area of demand to then continue higher, and then we are coming for this area here. So that becomes a break of structure. Basically, you guys understand what I'm saying now. So if you look at it on the 4-hour time frame, it's going to be something like this. Yeah, something like this. So this is going to become an area, a breaker block here. This, sorry, yeah, bullish breaker block. This is also going to become a breaker block if price breaks through this. So now we don't know, the daily time frame is kind of far, but thinking based on my own thoughts, thinking that price is going to come here like this and then fall down, like the way some people like to take smart money concepts, reversal strategies, is highly unlikely. Believe me, it's highly unlikely. We might have some kind of pullback, we might have we might have something like this. We might have something like this. Price comes here, come here and then come down to this area of demand and then break higher. We could have something like this. So I'll see how price behaves. Because now this is going to be something similar to my former first trade, where there was a sell and a buy closely related together. That was why I didn't take that sell down that time. So this is a buy here and this is a sell. But the best way is to wait for clear price action. Let me see who is going to win. Is it the buyers or the sellers? Then I take action. Will I go long? Will I go short? Most likely longs, but we'll see how it goes. All right, so I'll update you guys on that. This is just a breakdown of what I'm looking forward to on my next trade on USD JPY. Peace. Okay, so currently we can see this is the 4-hour time frame, and this is a new candlestick open. So price failed to close above this high with a body. We had a rejection, slight rejection, not that much. So what this is showing is a little bit of exhaustion, and in cases like this is like a mini supply zone. So some people might be looking forward to go short from here, maybe scalpers and all. Even this little move, some people have made money from it, those on the lower time frame. So we have two options now. It's either price breaks this high with a body, making this place become a break of structure, or in case like this, now this is no longer on the previous high, we have this high like this. So I think we're going to have to use this one. So it's going to be something like this. This is going to be the new high to form a break of structure, if I'm not mistaken. So in case like this, we might have a little pullback into this area to fill some buy orders, to then continue higher, take out this high, to then hit this key area of supply that we've been trying to reach for days now. Okay, so that being said, we know what price is going to do in line with the overall bias, which is in line with the overall trend of the market. Now let's look at the lower time frame. Okay, this is the daily, and if we see on the daily time frame here, it makes sense to be looking for longs and not shorts. Right, that's why you want to always see what the higher time frame is doing. So far it's still longs only, longs, and this candlestick is even about to close. It might close above this candlestick's high, so it's bullish and will definitely continue the uptrend. That supply zone there, trust me, might not even hold. So let's look at the time frame below the 4-hour, which is 1 hour, and we can see what is price doing on the 1 hour time frame here. Oh, that's nice. So price is coming for this unmitigated breaker block here. There is an unmitigated, oh shoot, I zoomed so much. There's an unmitigated breaker block here, this, that price is like coming to try and fill to grab some buy orders. So this area becomes an area of interest. You know, I had this before, but I set the limit order, then I cancelled it due to the way price was moving very, very fast. I was like, maybe it's not coming back there soon. But now the way I see it, most likely we'll come back to this place and then fill the order here to grab some more. You know, what moves the market is liquidity. So if there is an exhaustion here, we've been in an uptrend and there's an exhaustion, the market has to come down a little bit, grab some more buy orders to then continue higher. Then this point becomes another break of structure, so we can capitalize on that. So now this is the entry on the 1 hour time frame, because if I use the 30 minutes time frame, let's check the 30 minutes time frame. This is the 30 minutes time frame. To be quite honest, it's like price has already tapped into this area. I don't know. Let's set things up on the 1 hour first, then if we can see some refinements to do on the 30 minutes, no problem. So have a long here like this. This is basically going to be it. Let's say entry here first, and then stop loss is going to be, this is the end of the breaker. So let's say a few more pips down. I'm still adjusting. I've not yet calculated the 50 that I normally use, and take profit still remains the same. This whole point, take profit still remains this whole point. Okay, and now this is a 1.81 risk to reward ratio, which is not that bad. It's not that bad. Looking at it, price can come here like this, tap into this and continue higher, but same price will break through below. And also we can see that this breaker block also has a fair value gap unmitigated, so price might want to come for it. Now let's see on the 30 minutes time frame. Okay, on the 30 minutes time frame, this is what it looks like. If I put my entry here, let me see if I put my entry here. Let me put my entry here at the top of this 147.521. 147.521. Okay, beautiful. 147.521. This gives us a 2.5 risk to reward ratio, and then my stop loss should be this is a very this is if I say I should use this, because now this breaker price came in, you know, respected this breaker, but it deep into the demand zone, and then we formed another demand zone. So now it's safe to say price shouldn't break below this point anymore. It's safe to say that price shouldn't go below this point anymore. Literally, it's safe to say that price shouldn't go below it anymore. So realistically speaking, if I'm setting my stop loss, I can set my stop loss here, but that's going to be a lot. That's going to be a lot. So let's look at the 1 hour time frame to see. Let's look at the 1 hour time frame to see. Still the same thing on the 1 hour time frame. Also, it's still the same thing on the 1 hour time frame. Setting my, so now it's like, it's now on the 30 minutes as if my entry is at this fair value gap, which is nice, which is a nice one, by the way. But the stop loss is the issue. The stop loss, that's too wide. Okay, let's say we have a lot of rejections here like this. Okay, perfect. So we have a lot of rejections here like this. Good. Which means this breaker block ending, we had price weakening, weakening out, and then rejecting. This was a strong rejection, and then we still weaked out. So this area becomes a very strong area of the market. Price shouldn't be coming below this. So now if we have this like this is my breaker. The end is 147.333. So 147.333. Okay, good. Nice. Let's add 50 to this. Where's my phone? Let me grab my phone. 188 plus 50 points. 188 plus 50. That's 238. So if I put this at 238 like this. Okay, beautiful. Now that gives me a risk to reward ratio of 2.63 without doing too much of macro managing, because I want to make sure my stops is at the right place. So on the 4-hour time frame, let me see how it looks on the 4-hour time frame. Okay. Take profit low 148.147. 148.147. Take profit. So this is how it looks on the 4-hour time frame, but I'll still like to see how it looks. Okay, so this is the line, this is rejection here. Okay, this is looking good. This is looking good, but will I get tapped in? If we look at this here, this is a fair value gap right here. This line, this one, and this one, this is a fair value gap, and now it's like price has stinged into this fair value gap. But we might retrace deeper. Okay. Hello. Good morning. This is, what's the time here? This is 4:23 a.m. in the morning, the following day. I'm just waking up right now. My alarm went off, but I was so exhausted I couldn't even check the chart. So I'm checking right now. Let's see what price is doing. I don't know what caused this huge spike. Price came really close to this order block and then rejected. Strong rejection right here. The 1-hour time frame. But let's take a look at the daily. This had it been price tapped into this sell order block, because I'm very conscious of this sell order block. Oh, now I see. We have this breaker, and then we have this sell order block here. Price came in, rejected, and then also price came here, rejected. Okay, I see. So to me, as long as price hasn't hit this point here, and now we are still bullish. To me, that's still bullish. I would have cancelled this position right now if this my alert here went off. I mean, price entered into this place, then I'll know, okay, for sure. Right, but right now, let's look at the 4-hour time frame before looking at the daily. So on the 4-hour here, because in trading you need to know when your setup is no longer valid or when it's valid. So now you can see here we had this, we've been pushing up exactly. So this is the sell here. It came close, rejected. Now in my own opinion, when price comes close to a particular place like this, a particular real order block, and then reject, what it simply means is some sell orders have been filled. Some sell orders that was resting in this place has been filled. So now we have, it took price down, selling off those orders with it. I personally am seeing something like this. We come into this order block here to then continue higher, something like that. That's what I'm saying. Because right now, if this whole, this like this,
If this whole point, if price breaks through it, if price breaks through this whole point, then that becomes a breaker block to the downward side. That means we'll have, if price does something like this from here, boom, breaks down to this place, then we can have price go back into this point to then continue lower to this other block. Yes, like this. But I think it is too early for that. It's too early for that. We haven't really hit a key level whereby um, we haven't really hit into this level to actually force price down. This is going to be a mere retracement. This is going to be a mere retracement. I'm still holding this my longs here. Still holding it. And it might fail and it might not, but another thing about trading is you need to have confidence in your setup. Build your confidence, build your confidence in yourself. Right now I have trader friends right now. I have a friend as I'm speaking to you right now. I talked to him this morning. I was like, yo, what's up with this spike I saw? You need to have people you can chat up with. Very good analysts too. And he's currently in a short. Okay, he's currently in a short on UJ right now. He's currently in a short on UJ right now. And me, on the other hand, I'm still holding my longs. So why am I sharing this? I'm just sharing this to let you know that you need to build confidence in yourself in trading. Okay. If you take the loss, you take the loss by the book. If you take a win, you take a win by the book. So you don't act based on other people's opinion or act based on what other people are doing. Okay. And learn how to trade and be confident in your own strategy and your edge yourself. So that's it. I can't say now because he's in a short. He might be trading a lower time frame, might be trading the 5 minutes time frame, I can't say that okay, I'm gonna cancel this. As long as price didn't hit this order block, to me, this setup remains valid because this breaker is still unmitigated. So let's look at the daily time frame. Let's look at the daily time frame so far. Okay, beautiful. So on the daily here, in the daily we can see that this price came close to that point and then rejected downwards, but not enough. I personally think that this whole body here is a huge body for price to. This is so huge for price to come and take out this low. I mean, for such bullish previous day, I don't think price is going to come in and then take her out like that. So we can have this kind of push in, which is actually what I want. This push in and then push out. Let's use something. Where's my gun box? For those guys that use Fibonacci. So they'll have something like this. I don't see how deep into this place price has retraced. Okay, that's the style. We have 0.5. Let me mark all to just see how deep of retracement price has gone in. Yep. So we have this like this down to this point. So how deep has price retraced into it? Let me remove this. Let's just lose. How to change this to like purple something. Okay, so we have 0.5, we have 618, 0.618, we have 0.75, and then we have 1. So The green, is 0.5. So price hasn't even retraced like 0.5 yet. We might have a 618 retracement. We might retrace into the 618 of this whole candlestick to then continue higher. Something like that. I'm still more confident. I'm still confident in this bias. I'm still confident in it. But I have to check. Let's look at the weekly. Alright, pretty much the weekly is still very much bullish. The weekly is still very, very much bullish. The weekly is still very much bullish. We might just have that little rejection and then we continue higher. So I'm holding my bias. I've looked at all the confirmations I need. So if price taps into this point and then takes out this high here, we have a new break of structure to the upward side. Beautiful. Beautiful. Okay, so I'll update you guys how this trade goes. I just wanted to see okay, okay. This candlestick closes by 6 a.m. in the morning. We'll see how it closes. It might close as a doji. And then we'll have some kind of 1, 2, maybe 3 candlesticks in, and then boom, we have that upward. Whichever ways, I'm cool. I'll catch you guys after the whole scenario. So the trade is literally playing with my feelings right now. Close to my entry, rejecting. Close to my entry, rejecting. But I believe I'll get tapped in. You know that kind of feeling whereby you just want price to tap you in. You should know you're already in the position. Then whatever happens, rather than it, playing around your entry. So that's the emotions going through my head right now. I just need price to tap me in. Alright, let me get in. Once price tap me in, okay, fine. You can start going back up and all. Don't do this to me, man. Don't do this to me by coming here and then just getting close to my entry and then shooting back up. That would be so painful. If you are watching the video up to this very moment, let me know in the comment section which one is more painful. You hitting stop loss or you missing a trade, like missing an entry. Which one is more painful to you? If you are watching until this very moment, let me know which one is more painful. On the 4-hour time frame, so we had this candlestick close as a doji, just like I said. So we had this huge rejection downwards, and then but yet the buyer still pushed. So this is an indecisive candle. So I'm expecting something like this candlestick come in. You can also get to somewhere like here to then continue higher to break this high. I'm very, very confident we are going for this high. We need to break this high, or at least tap into this high before the real move downward occurs. We need to take out that high. But on the 1-hour time frame, I think while there were rejections, if you look to the left here, this is this is a bearish breaker block paired together with a bearish other block. So price came in there before and then rejected. Came in again the second time, ranged, tried to break through but failed, and then we are coming down to few more buy orders so that we can come back up. Because, well, if I was trying to like do it, I'll say my stop loss should be here, but that's too much. That's too much. This is a 1-hour breaker block, like I explained earlier. So anything that makes price goes below this, that means this breaker block is no longer valid, and then it shouldn't reach up to that. If you look at here, look at this, we had a bearish breaker block paired together with a bearish order block. Don't mind my voice. I'm just waking up. This is 7:40 in the morning. So price came, deep into it and then came out. So price should respect this. Price should respect this. I mean, we all go through emotions, right? We all go through emotions in trading. This is me. This is me going through emotions, right? My trade is here to trigger, but I'm getting emotional about it. So if anybody tells you you can trade without emotions, it's a lie. You just have to build that confidence and trust your edge no matter what, even though the market tends to test you or play with your feelings. So I just want this trade to get tapped in. Once I'm tapped in, whatever happens, I don't care. If I lose, then it's fine. It's by the book. Alright, so I'll catch you guys once I get tapped in, you know, or if I miss the trade either ways. Alright guys, so this trade has finally tapped me in. At least now the anxiety is over. So there's only, let me make a screen record right now. Okay, because I'm currently floating in like $0.5, okay, 0.46 thereabouts. So now there's only one outcome to this trade. Either I hit my SL, or I come out of this trade profitable. Those are the only two things that can happen. But that anxiety of losing the trade or missing out on the trade, the FOMO, that is gone. So whatever happens, happens. I'll catch you guys later. If it hits stop loss, no problem. If it's a profitable one, then no problem. So now this is where you believe in the analysis you've done for yourself. You've made your analysis, you've done your trading. So all I can do now is just execute patience, exercise patience, allow price to do what it wants to do. I mean, if I was patient for how many hours since this formed? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, almost 19 hours. Almost 19 hours before this price eventually tapped me in. So why can't I be patient for price to now go either in my direction or against me? So see you guys later. Alright guys, quick update on the trade so far. So just like I anticipated, we had this price coming to this area of demand, and then boom, immediately we had a strong rejection to the upper side. Very strong bullish candlestick on the 1 hour time frame, and now we are heading for this point here. This is where my 1R is. The moment price gets here, my stops will be moved to break even. One position will close because I'm opening two positions. I want to be locking in profits, and then we let the rest move to the full TP here. So basically that's it for now. Just wanted to show the updates. Price is looking very good so far, especially in 2 minutes time. This candlestick closes. If this candlestick also closes on a high with this strong volume and momentum, then this is a really good trade. On the 4 hour time frame, let's look at it. On the 4 hour time frame, we had this we stinged into this this other block here, this breaker block on the 1 hour time frame. Yeah, breaker block paired together with the other block, which makes it even very more strong to trade off with. So we stinged into it, and then we had a rejection. This looks like a hammer or something like that. I don't candlestick. Those of you that trade candlesticks, you understand better. And then the next candlestick we are having now is a bullish one. So if we can have this 4 hour candlestick to be bullish enough to hit this place, then this trade becomes a risk-free one, and a one whereby I've also secured profit in it. So the trade can no longer become a losing trade anymore. It's risk-free, and at the same time I've taken money off the table when price gets to this place. That's the best way you want to trade. You want to trade in a way whereby it's risk-free, you've secured a little bit of profit, and then you can let the rest run. Worst case scenario, you still come out of that trade profitable. You do not want to be that trader who is always giving back money to the market. Currently now I'm floating about I don't want to check on my MT5. I don't like getting attached to the money I'm seeing, but you can see I'm quite floating in about $4 of profit, or more than $4 right now, because I risked $4 on this trade, which is 2%. of my account. So I should be almost $4 or $3 in floating profit, something like that. So you do not want to give back that amount of money, because think of it like this: how many times, let's say in 5 times, whereby you could have, out of $4, probably you could have taken two and then let the rest run, and then you give back the money back to the market, and even lose your $4. So now, in the space of 5 trades, or let's use 10 trades for example, now in the space of 10 trades, not in a row, of course not in a row, but let's say 10 trades that went up about maybe 2 hour and then came back to stop you out because you wanted to have that full TP or SL method, and now 10 trades that was significantly in profit and then came back to stop you break even. If you do that in 10 trades, that means you made nothing from those trades. If it came back to stop you at your stop loss, in that case now you've lost, let's say you're risking $4, that means you've lost $40 to those kind of setups. I'm not saying you don't have a profitable edge. Yeah, your edge can still be profitable overall, but now that means you've lost $40 trading that way, right? Now, because of that, your it's kind of affecting your profit in a way. Think about it like this: those $4 that you were up, let's say you were able to take two out of it, so now 2 times 10, so you will have been up, you'll have secured yourself $20 profits, but instead you are down $40, like you've lost $40. So in a series of 10 trades, 100 trades, you will realize that you are losing a lot of money back to the market that you could have secured some. So that's just the advice on this particular trade. I'll catch you guys if this trade, once this trade hits 1 hour, let me know. I'll make a record and then we'll see it. And if it goes to my stop loss, which the market can be crazy and it can do that, but I don't want that. I don't want that to happen. To be quite honest, I'll kind of feel bad. We are all human beings. We are emotional sometimes. But whatever the outcome is, I'm ready and prepared for it. So I'll catch you guys later. Alright, guys. Update on the trade. Currently, I moved my stops to break even. I'm going to attach a screen record to this video right now. So this candlestick I'm seeing here, and then we look at the 4-hour time frame. Look at this, look at this, look at this huge rejection, and then we are coming down. At this point, my stops is at break even. So if I get stopped out, I know, okay, no problem. Because now let's explain why immediately I switched and moved my stops to break even. I'll explain now in a bit. So let's come to the 30 minutes time frame. Let's come lower. There's something I saw. Now look at this here. This is a supply zone. Alright, so a supply zone has been formed inside this area. So a supply zone has been formed inside this area like this. So you can see this. A supply zone has been formed here. So price went back, tapped into the supply zone, and then it's coming down again. If we break this low inside here, if we break this low here, this is going to become another break of structure to the downward side. So having two break of structures to the downward side, so it's going to be targeting this whole liquidity like this whole trend line liquidity like this is going to be targeted. We are coming for everything like this. So at this point, I do not want to be in this trade anymore. If I survive, okay, if I survive, fine. If I don't, my stops is already at break even. Okay, my stops is at break even on this trade right now, because be quite honest, it's no longer looking good. That's the thing about trading. You need to know when to be quick to switch, your whole narrative. So it's fluctuating here. If it stops me out at break even, fine. If I survive the trade, which is highly unlikely that I survive, then all good for me. But I'm not going to lose money on this trade stupidly, because let's look at it also on the 15 minutes time frame. See it on the 15 minutes time frame. We also have a sell order block. This is a sell order block here, paired together with a breaker block. So we are also coming for this low. Literally, we are coming for this low. For sure. In fact, it would be wise of me to even close our positions right now. Let's do that. Let me close our positions right now on the trade while doing this screen record. Let's close our position. Bulk orders. Yes, accept. And then bulk operation, close all positions. Boom. All positions closed. Close all positions. So the account is currently up about 1%. So the account is up 1%. Now let me tell you why. Okay, at the end of this record, you will see that this trade will eventually take out this low. This is going to be a record structure. So I've closed all positions. So far, this is the history here. Um, I'll count this ones as a break even. So we had a $1.5 loss. That was the first trade. Now this second one also stopped me out in profit, and now we have this one I closed manually at break even, but I was able to secure some cents out of it. We look for better opportunities. We look for better opportunities because right now this is not looking good at all. This is not looking good at all, especially with this rejection here. So before I dish out this video, I'll just wait for price, to see what price does, if price eventually takes this out or not, before I release this video. So it's like, if I was wrong, fine, I'll know. Okay, but if I was right, if I'm right right now, I just saved myself an unnecessary loss that looks obvious, because on the 15 minutes time frame, we have this is not looking good at all, 30 minutes also, it's not looking good at all. We have so many cells forming now. See, a sell order block, sell order block, sell order block, sell breaker block. Although on the 1 hour nothing is showing yet, but we're already forming a lot of cells here right now. So we'll take out this low for sure. Take out this low. So sometimes you do all the work, you do all the things, and then you come out break even. You come out on a loss. Now this is where trade management comes in place. Understand your strategy well to know that, okay, sometimes you might enter a trade and it was looking good, and then things change. Be quick to understand and then realize that, okay, this setup is no longer valid. Okay, this setup is no longer valid, and save yourself unnecessary losses. I'll catch you guys at the end of the video, at the end of this trade. So if this trade eventually hits the full stop loss, we'll see it, and if it goes back for the take profit, we'll see it. Either ways, there are endless opportunities in the market, and I can always look for another trade. Alright, so this trade eventually hit the 1 hour where I was seeking to take a $2 partial profit, and then boom, the next candle it just like wicked in there and then rejected straight back to the entry, which means, in all honesty, I would have come out of this trade with a $2 locked in profit, and the other one is going to be break even. So it's going to be break even basically. So I'll have come out with a $2 again profit, but I closed the trade at break even. You guys all watched it and saw it live, and I'm not pained by this trade at all, because the way price is moving right now, this is a very, very terrible and choppy price action. I don't like to be in trades like this. I mean, price moving like this on the 1 hour time frame, not even the lower time frame. For price to be moving like this on the 1 hour time frame, this is not good. This is not good at all. This is not good. I don't want to be in such kind of trade. But however, at the being, my account was, now some people will be like, why did I close that kind of trade? I mean, do I not believe in my edge or something? No, it's not that. Let me drop a quick explanation. It's simply because the account is still new. I'm still starting up the account. The account is still fresh. Okay, whenever you're starting your trading account, you want to be as far away as possible from drawdown. Okay, you want to be as far as possible, as far away as possible from drawdown, because the equity on the account, the profit on the account, right now the account is sitting on 1.13% profit gain after 3 trades. So I mean, I'm on 1.13% gain. You don't want to, go too deep into drawdown in terms of losses, because when you lose trade, you don't just lose money, you lose your confidence together with the trade. I'm not saying losses are inevitable, but had it been, the account is already up like $220, $215, even $210, okay, I could be willing to, even that 210 is still too small.
let's say 220, I could be willing to leave the trade and see how it plays out. Why? Because I know now whatever money I lose is not my capital, it's part of the profits I've made from the market. So at that point it's risk free. In terms of capital wise, all these things is not just strategy is not just enough. You need to know how to manage account, you need to know how to manage your trades and all. So I started off with the $200, and let's say the account is now sitting on $220, for example. So that's 20% gain, right? Is it 20% gain? Yes, 20% gain. So at that point, even if I lose $4 on the trade, it doesn't really matter because my $200 is secure and I'm far away from drawdown as possible. I mean, I'll need to take more than 5 trades losses in a row for me to go back to break even. But at this moment right now, I don't want to go too deep into drawdown. It's going to affect me to climb out. I want to keep stacking up those wins, all right, stacking up those wins from good setups. Any setup that is not playing out well, I get out immediately. And eventually, when the account is stacked up to a certain extent, yes, I can now start to have that kind of much more better confidence to trade. So at this point in time, I'm not willing to be risking anyhow, and then trying to say TP or SL and all of that, because trust me, the moment this account starts to go 190, 180 in drawdown, 170 in drawdown, you're setting yourself up for failure, because to come out of that drawdown back into break even and back into profits is much more difficult than you think. So that's it. And also, I'm trading the right way. I'm not risking $10 per trade, $20 per trade on a $200 account, because if I was doing that, many people often look at the potential gains. I might make, if I risk $20 on this trade now, I make 40, 50, 60 in just one trade, and your account is up like 50% or 100%. But what about the downside? What about the downside? What if you lose that $20? So now you lose maybe 3 trades in a row, $20. Your account is already down by 60. You're in a drawdown of 140. That's not really the best approach to trading. You're already down, you're down is $60. And now you have to make $60 before you get back to break even, before you climb up. So it's small consistent gains is way better than these fast quick gains. That's why a lot of people tend to lose money trading. It's not really about having a strategy. It's not really about you uh not knowing how to trade at all. It's simply because you are risking too much. When you are risking too much on a trade, you don't tend to perform well because you don't allow the game of probability to play in your favor despite having an edge. Because the moment you are too deep in drawdown, you start to get scared to take setups, you start to size down on your trade, which is a very, very bad thing in my own opinion. You were risking $4, but let's say you were risking $20 per trade before, and you've taken like 3 losses in a row. Now you are down to $60, and you say, okay, it's time to size down. You now start taking $10 per trade, and then you're making $20 profits, $25, $30 profit. You're still in that drawdown, and you're like, oh, I think I'm coming out. My winning streak is coming back. Let me up my size again, and then you up your size back to 20, and then you're in drawdown, and it becomes a loophole. It just becomes a loophole of you draw down, trying to come out and all of that. And then you never be you are never going to be able to come out of that drawdown. So it's better you risk the amount of money that you can risk on your account from start to finish without having too much effect. Yes, your growth might look slow. Yes, it might look as if you are doing bad. Maybe your trade is too your gains. This guy is doing 5% a month, 10% a month, 3% a month, 4% a month, while another person is flipping $200 to $1,000 in one week. But I tell you, in the space of 1 year, okay, you are going to be more profitable than that person who is flipping the $200 to 1K in one week, because you don't know how many $200 they blow before they get it right. Okay, and there is no reputable firm that want to work with such kind of trader who takes on very large amount of risk. You want to see the equity curve of your account. You don't go too deep in drawdown. You have that kind of smooth equity curve. That's what professional trading is about, and not just. There's a difference between trading the right way and making money. There's a difference. You can press buy, press sell with a very large amount of big lots. Look for pips. How do they call it? I'm looking for 20 pips. I'm looking for 10 pips. I'm looking for 5 pips. The way they say it. If I can open a trade with 10 lots and just get 5 pips, I've made so amount of money. Yeah, you're trading for money. You're trading because you want to make money. But if you want to trade the right way, then you need to have an edge. You need to have your risk management in place. You need to have a system you follow. You need to have your psychology in place. You need to have your trade management in place. You need to know when your trade is no longer valid, when you should hold, when you should add to your winning positions, and so many things. Now that's a whole different other level. So that is why this series is here, to document all those things as I trade the right way. Okay, so don't expect that I'm going to take this $200 account to $1,000 in 2 weeks or 3 weeks. It's not possible. It could take months to do that, but we'll see how the equity curve of the account looks like. That's the goal. So I'll catch you guys in the next episode. If you stick around to this very end, to the end of this video, let me know in the comment section. I'd like to know who was able to watch till this very point. Until then, stay blessed.